Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Thursday, March the 26th. I'm starting off with Obtala Resources, where you can see that there's been a second rebound off the floor of a rising July trend channel, and also a bounce off a January RSI uptrend line as well. So double momentum there for the shares. All we probably need to see now is an end of day close above the 200-day moving average of 10.24 pence to suggests that we're going to make a pretty direct move towards the top of last year's channel, as high as 14 pence. That would retest the best levels of the past year and give us a decent upside from current levels. The obvious stop loss and end of day close back below the 9 pence zone, which has been double support, triple support really since the beginning of the year. Yesterday's move also backed by a spike in volume as well, which is always helpful for those who are just trying to decide whether to get into a situation or not. Next up is rare earth minerals. Obviously, a lot of people quite keen on this situation. Situation in terms of the technicals is that we've had a gap through the 50-day moving average, which is a pretty decent kick-starting buy signal from a technical perspective. Obviously, we've been bumping along the bottom over the last 3-4 months, and actually beyond, perhaps since October, 0.8 pence. The support dips towards that zone really been a buying opportunity anyway, but the gap through the 50-day line is significant, as is the bounce off the floor of a rising October price channel as well. Initial upside back to 1.15 pence and up to 1.4 pence after that over the next month or two. Even if this is just a full storm move, as the December situation and October was, there we just saw 2-3 days of heightened price action before the shares fell back again. But perhaps on this occasion we might have a more sustained move. Petroleum is the next one on the block, and here it looks as though we're also seeing the shares start to perk up after an extended base. Situation here, but pushed through the 50-day moving average. Most of yesterday's price action above that 1.7 pence level. That's a decent stop loss zone. So from 1.7 pence and below, only really back below 1.5 pence at this stage would be outright negative. We've also had a rebound off this extended RSI support line as well over the past week. And target here as high as 3 pence, which is the top of a rising November price channel. If you're cautious on the shares, maybe wait for another end of day close above the 50-day line, given that in the past we've seen a few closes above it and then a failure. But this looks a little bit better with the higher lows for February and March as well. So maybe worth giving Petroleum the benefit of the doubt over the next few sessions. Stock which I haven't looked at, I think at all, in fact, here on Bulletin Board Heroes is STM Group, but looks like we've got quite a sharp technical situation here. We had the golden cross buy signal beginning of February between the 50-day and 200-day moving averages. Then earlier this month, a gap through the 50-day moving average, which is, as we saw with rare earth, can be a decent buy signal. And then this bull flag above former resistance and the breakout as well. Situation now probably well above 30 pence, which was the old January resistance. We're looking for 45 pence as a target over the next couple of months. That would be at the top of a rising trend channel from February last year. So looking quite encouraging there for STM Group. The only negative probably in the near term is that the RSI is very high indeed. That's up at 87. So one would probably prefer a dip towards the 30 pence level to buy into. Maybe the 10-day moving average of 31.5 pence would be suitable. And we had the volume spike there, which is noticeable as well. Just to back the move and the idea of recovery here. Another stock, and the final stock of the day, is 10 Alps. Here we've got a gap through the 200-day moving average. That's at 0.7 pence. Looks like we're at the floor. We've bounced off the floor of a rising November price channel. All that's left now probably is an end of day close above the 50-day moving average, 0.78 pence if you're cautious. But usually gaps through the 200-day line are decent and sustained buy signals, or sustainable buy signals, and we're looking for a target of 1.6 pence, which is the top of last year's price channel, to pan out after that. That's it from me. More updates at masterinvestor.co.uk.